Hi, I'm Stan Evans of Evans Wealth Management. Today I want to discuss a few economic ideas and strategies for you to consider as we experience these choppy, volatile markets. You've probably noticed the U.S. stock prices have fared poorly so far this year. The S&P 500 closed yesterday at 1859, down almost 13% from its July 2015 high. You've probably also noticed that the biggest daily drops seem to occur either on bad news from China or when oil prices slide further. I believe the market is probably overreacting to news from China by a wide margin. In the case of oil prices, it seems to have the direction wrong. Let's take those statements one at a time. Start with trade. If Chinese growth slows, as is happening, though who knows by how much, many countries' exports will shrink. That's a big deal to some countries, especially emerging markets that rely heavily on commodity exports, but not to the United States. The Chinese export to us about 3 times as much goods and services as we export to them. That isn't a problem. Bilateral trade isn't supposed to balance, but it means that China is far from our leading export market, nothing like, say, Canada or Mexico. What about oil prices here? It appears the market's even got the direction wrong. Ask yourself, when the price of something you buy goes down, does that make you better or worse off? The obvious answer is better off. Each of us is better off when the price of oil goes down. Stunning developments in fracking and related technologies have reduced U.S. dependence on foreign oil dramatically. That's wonderful, but the United States is still a net importer of oil. Over the last 11 months of 2015, the United States imported $76 billion worth of oil, but that's down from $174 billion the year before. But we're not an oil exporting country yet. So collapsing oil prices is terrible news for Saudi Arabia and Venezuela, but they are good news for most American businesses. In sum, the analysts and traders who make stock market news seem to have a few things wrong. China is not as big a deal to us as they think, and falling oil prices should help, not hurt, the U.S. growth and its economy. Bottom line, rather than focusing on the turbulence, wondering if you need to do something now, or what the markets will do tomorrow, it makes more sense to focus on developing and maintaining a sound investing plan. A good plan will help you ride out the peaks and valleys of the market and may help you achieve your financial goals. Tune in next week. We're going to put out another video that outlines 6 practical steps on how to deal with a volatile market. Thanks for watching.